them to discuss. They will be dwelling on points at the topic 2 and 3, which are entrepreneurship and inclusiveness for a thriving digital economy. And the third one, which is fintech and SMEs, financial inclusion and access to finance. These are the two main topics they are going to take us through for this period of the discussions. Thank you so much, sir.
Good evening, distinguished participants. Hello. Dr. Lawson, are we still? Okay. Thank you. Yes, good evening, distinguished participants. We're almost rounding up the activities for today with this special discussion panel. And of course, the discussion panel will dwell on two of the presentations before now. One of them is the topic related to entrepreneurship and inclusiveness and for a thriving digital economy. And that was delivered by Dr. Lawale Fasanya, who is our Deputy Vice President. The other topic is fintech and SMEs, on financial inclusion and access to finance for MSMEs, delivered by ARM Investment. Of course, as panelists, I want to welcome you especially to this panel. We have just about 1 hour to do justice to this topic. Let's look at it. Apart from the perspective of the presenter, let's also have other perspectives from the panelists, the relationships between the core themes, the core issues, and how it's going to impact SMEs, how it's going to impact us as business development professionals, and how IBD can benefit from this kind of arrangement to support ourselves, the economy, and SMEs, as the case may be. So, like I said, we have just 1 hour to go, and from the plan of the panel, each of the panelists, we are four panelists. Each of the panelists will have about 10 minutes to discuss any aspect of these two topics. Then we'll have another 10 minutes for audience participation and questions and answers and observations. And then the final 10 minutes is for conclusion, final thoughts, and then we'll wrap it up. So based on that, I want to welcome these distinguished panelists, and I sincerely hope that the audience will enjoy the discussions. And of course, when it comes to the audience participation, we also want to have the views of the audience on the topics to be discussed. So just once you're called, just take about 1 minute, talk about yourself, and then you go to the issues raised. Now, starting from Colonel Obasi, the topic on entrepreneurship and inclusiveness that was delivered by Dr. Fasanya. We want to get your perspective on the relationship between entrepreneurship and inclusiveness in this respect. Thank you so much.
Thank you very much, sir. Gentlemen and ladies, this program is eye-opening. Dr. Fasanya did a lot of justice to that paper. And I think recently, September this year, the federal government changed the curriculum for primary education and secondary education, reflecting now on more of entrepreneurship. Our curricula is faulty. You finish university, most are waiting for white-collar jobs. And that's not how an economy is developed. And we have a useful population that are looking forward to what to do to drive digital economy. If you, like yesterday was the Champions League, you just see youths trooping out to watch football. Precious time that are supposed to be used to think. We waste it on Champions League football. I'm not saying that watching football is bad, but the rate we waste manpower is alarming. I'm happy to be part of that new initiative. The entrepreneurship now will start from primary 3. Children will be taught on how to even repair phones. And the only aspect the government should come, how do we penetrate, have more internet penetration? Though Nigeria still stands high when compared to other African countries with regard to internet penetration, but we still need to do more. Virtually all our phones and the computers are imported from China. What are the government doing? I think the Institute can also champion this by trying to leverage on their contacts to see how we can drive this innovation by bringing home the manufacturing of these computer gadgets. You see, the other day I went to buy a charger. You buy a charger today, next 2 days that charger is gone. I don't know whether you've witnessed that. In fact, I virtually keep on buying chargers and even power bank. You think you are buying the original one, they want 2-3 days, maximum 1 week, that charger is gone. How do we drive this special part of innovation? Our hope, the last speaker hammered more on AI. And you can't drive AI without a computer or technological breakthrough. You can't drive it. So what do we do? Is to champion this or leverage this economy by starting corporations and industries that can champion the production of these computer gadgets. We cannot solely depend on China. Recently, there was a propaganda, unquote, that iPhone that are made in Israel contains microchips that monitor what you say. So we can't leave our technology breakthrough to outsiders. We've got to drive our own development on that sector. I'm aware that India, former Prime Minister of India, brought scientists together, gave them computer, and gave them 10 years. We want to industrialize this nation. I think we can replicate that by, we have enough of scientists. I know Xenos started it, and but it's not enough. We prefer to go to China, give them money to manufacture these same computers, and bring them to Nigeria to sell. Why can't we start that development here? And the market is enormous. A market that in 2030 is projected to be about 300 million people. What a market. What a market that we can leverage. I'm happy that IBD is initiating the discussion, and I'm very, very glad that in no distant time we will be part of the game. Thank you for now.
Yeah, thank you so much, Colonel Obasi. Yes, entrepreneurship is very key for a thriving economy. And then is the basis for driving a digital economy, is the basis for driving an innovative economy. And then for entrepreneurship to thrive, there should be innovation, there should be support. In fact, everybody, every youth, every person in the economy should be able to imbibe the tenets of entrepreneurship, because that's the way to go. Entrepreneurs, through the process of entrepreneurship, create jobs, create wealth, and alleviate poverty in the society. And of course, you remember that entrepreneurship and entrepreneurs are mainly private sector driven. The government or the public sector does not have any great impact on job creation in the society. They are just there, public sector is just there to create the enabling environment for entrepreneurs and entrepreneurship to thrive. So for us to think about driving the economy, the government, the public sector has to create that enabling environment to make sure that individuals, private individuals can drive it and achieve the goals of the society, which means for us to achieve a critical entrepreneurship mass, there must be inclusiveness in this society so that everybody will have a level playing field to achieve inclusiveness. Thank you so much, Colonel Obasi, for this input. I want to get to Dr. Azubike Bakare right now. Yes, a digital economy is also a stepping stone, a catalyst for entrepreneurship in the society. The digital economy is expected to support entrepreneurs and entrepreneurship to enable the economy to achieve its aims and objectives in driving growth and development. So, what is the relationship between entrepreneurship and the digital economy, and how can the digital economy support entrepreneurs to reach the ultimate goal? Thank you so much.
Thank you, Mr. Moderator, for the insight. First and foremost, I want to appreciate my participating in this program. It was quite, eye-opening. I really am taking back home a lot of knowledge from my participation in this program. When we talk about entrepreneurship and digital economy, I want us to go down to the basis, which is entrepreneurship and inclusiveness. There is a portion in the Bible where somebody was reading and the teacher said, "Do you really understand what you're reading?" First and foremost, do we really understand what entrepreneurship really pertains? We look at entrepreneurship as an all-commerce affair, but it is not really that by its concept. If you want to be an entrepreneur, you must be ready to be innovative. You must be ready to add value to whatever you're doing. You have to be a problem solver. It is when you solve problems that the market will be created. Sometimes we try to model up the businessman and the entrepreneur, though there may be a symbiotic relationship between the entrepreneur and the businessman. The entrepreneur is a businessman, but the businessman may not necessarily be an entrepreneur, because the businessman's basic interest is money making. But the entrepreneur, first and foremost interest, is to provide solution to a problem, to add value. He is innovative. Let us take a simple product for an example, the watermelon. Whereas the businessman is ready to sell his watermelon whole, the entrepreneur will cut it into pieces so that everybody will be able to afford the watermelon. He will even go further to extract the juice so that if you do not want it whole or cut in pieces, you can now take the juice from the watermelon. So in the creation of, that is the reason of creating value. So in the entrepreneur's world, he is solving a problem. He is being innovative. So that is the slight difference between the entrepreneur and the core businessman. A man like Dangote could be likened to is a pure entrepreneur. People may be looking at the building of the refinery as maybe he has built it to make money. But remember the problem of fuel scarcity in Nigeria. That is reasonably what led him into thinking of building that refinery. Yes, if you solve problem, definitely money will come. But the driving force of an entrepreneur is to solve problem, is to add value. Therefore, have we now understood what we are talking about so that we do not model up ourselves If entrepreneur is taught at the school level, have they been taught what entrepreneur really means? Or are they just being taught about learning skills and becoming a businessman? If you do not add value, if you do not solve problem, if you do not solve human value or human problem, forget entrepreneurship. Thank you.
Yeah, thank you so much, Dr. Bakari, for that insight on who is an entrepreneur, the difference between entrepreneur and the businessman, the kind of value the entrepreneur brings to the table when he talks about driving growth and development. Thank you so much for that insight. And of course, the digital economy is part of what we're talking about right now, that the digital economy, in terms of innovation, in terms of tools to drive growth, supports the entrepreneurs, supports the process of entrepreneurship to achieve the overall growth and the development in the society. Yes, before we continue, Engineer Rabiu is not immediately available, so permit me to call on Mr. Alhaji Adamu Umar to join us as a panelist. You're welcome, please. You're welcome. Please, a round of applause for him. Yes, just like I was saying, we thank Dr. Azubike Bakari for that insight on entrepreneurship, and it is key on what we are talking about today. Yes, the next area I want to talk about is the fintech and SMEs. We'll be hearing about fintechs, financial technology firms, and then the kind of magic in quotes, the kind of magic they are doing in the society, the kind of things the processes they are using to fast forward everything, as if, a lot of people are wasting time, in terms of their processes and so on. And then, of course, when you think about what fintechs do in terms of supporting SMEs, is there any difference in what they do for SMEs now and what ordinary banking institutions are doing for SMEs? And if so, do you think it's better to have fintechs and throw away the other banks because they're not doing well? Thank you so much.
Thank you for the opportunity, sir. Once again, I'm grateful to be at this venue this evening to enjoy all the inputs from my senior ones in this platform. Thank you so much. I'm Benedict Oguche by name. Going straight to what you have just explained, 2020, the COVID-19 period, throw up so many things for us to understand about how fintech, the tech world, the entries of mobile money, it helped us to build a new entrepreneurial platform entirely. In so much so that some of us never knew, that we could have money on our palms without having cash available with us. We never knew we could do transaction without going into the banking hall, at, a variable length to transfer some kind of a huge sum of funds. We never knew that without entering the conventional bank, filling a lot of forms to do NAFEX transaction, international transaction, we never knew we could do it from the comfort, of our home and at the time that we desire to do it. Okay, so the fintech growth in Nigeria is still so minute that the sky is available for everybody to fly. The challenge now is the framework that we have on ground, the policy makers, how they've been able to carve the necessary framework to help the man in the remote city, in the remote village, to help me that is sitting here to be confident with whatever platform I'm using, to be very sure that my money will not miss along the line, to be sure that the transaction will deliver as I have thought it will go, as I have planned with my customers, and as I have arranged with my suppliers. So what we need to look at when it comes to the fintech world, harmonizing it, helping the young man that just come out of university that wants to start a business around that corridor, to be assimilated into that kind of industry and be able to build on what is on ground. I think the policymakers need to be very they need to be very serious with what they are doing. My brother this afternoon explained to us what they are doing about the cybersecurity on the cybersecurity platform. But to a large extent, I will sincerely tell you, I play in that field a lot, so I can tell you a lot is going on that most times even the conventional banks, are just losing money that they can't actually, say on the public space. Now, what the fintech has done is that they give easy accessible loans, to young business holders at a very exorbitant rate. But seriously, these business guys they go to the conventional bank, and for them to access this loan, it takes a lot. Let me not use foul language. It takes a lot for them to access this loan, and most time they cannot even access this loan, no matter how minute the loan seems. So it is more easier for them to go to this fintech houses, to employ their platform to access this loan, which is very bad, because you want to access a loan that the profit on the business you want to do might be technically be consumed, by the interest of that loan. If the business, the payment of that your supply, let me just take a supply as an example. So if I'm to do a supply to Brother Ben, and Brother Ben gives me the supply and promises to pay in 25 days time, and it takes me 7 days to make that supply, and I access the fund to make the supply from the fintech, it takes 7 days for me to make the supply. It's already 32 days, all right, which means it has entered the second of the second month. Now the fintech have expected that I should pay back in 30 days. Their 30 days they have given me, I've calculated the income that after the supply, even if I can get 10%, at least the business should not run away from my hand. But at the end of the day, the man now delays to pay, and it end up entering 45 days. In other words, the supplier is now hiding from the fintech, who is calling all the numbers in the world that is connected to his number. And the man is now hiding from paying back, and the man cannot go and shout on whoever the company he supplies to that they must pay him now, or else he may also lose that customer. So I think the conventional banks need to come up. Coming up from the conventional bank also means that the policy makers, needs to create, if possible, banks, SME banks, that SME can access this loan easily aside from the conventional bank. I think there are banks in place, but accessing those funds from those banks available, you need to have connection, you need to know people, you need to sign documents that you let go 4, 5, 6%, before they start processing the document online or offline. So why I say the policymakers are not serious, sorry for taking much of your time, sir. Why I say the policymakers are not serious is the will to follow up on the policy that is being made. So a system is easy. If I put on a system here to put on this light, Mr. J can go on this, put on the switch, the light comes on, he closes and goes his home. Mr. B can come, put off the switches, the light goes off. So the system is effective. It may not really need for the supervisor to be on ground to watch who is putting on the light for the light for the bulb to come on. So if there is a proper system that is being monitored, it may not be monitored physically, it may not even be monitored online, but if we are sincere and serious about it, the policy frameworks can create system in such a way that the conventional bank or the banks that is being designated to respond to these entrepreneurs can quickly give them funds, seed funds to go to their business. They will not be running to the fintech. But be as it may, the fintech is good, it makes money easily accessible to us, it makes our transfer easily doable, and even some of us here want to start new fintech businesses, and the sky is large enough accept all of us. Thank you so much for the opportunity.
Thank you, Engineer. Thank you, Dr. Ben Oguche, for that elaborate and enlightening insight into fintechs and SMEs in Nigeria. Of course, you've said it all that if you want it fast, very fast, you go through the fintech highway. And of course, there are also issues related to borrowing money from fintechs, high interest rates, and all that, the kind of pressure they will give to you if you do not pay back. The whole world will hear your voice if you do not pay, But that's okay. Now, people have been saying that fintechs have been doing so well. They've been contributing to the growth of credit to small businesses, access to finance to small businesses. That the bracket or the number of SMEs having access to finance, they are increasing by the day, and so on and so forth. Do you think
I can hear you. Go ahead. Okay, thank you, Mr. Moderator. I would like to start by introducing myself. As you mentioned that we need to introduce ourselves before we continue. My name is Adamu Umar, and an energy expert from the oil and gas industry. I had my career in the NNPC. Having had a sojourn of 35 years, I retired at the executive director level, even an MD of one of our subsidiaries, basically the gas, the LNG. So I also set up my own entity after pulling out, which is also on the same oil and gas line, called Zeman Oil and Gas Limited. I'm the chairman and the CEO. I'm very happy to be a member, and for that matter, I think a fellow, by the grace of God. By tomorrow, I will join the League of the Fellows of IBD. And I'm very happy also to be part of this conference. That was why I think I came very early, because I really wanted to get every bit of the discussion. And it has been a very wonderful day, a day for learning and a day for acquiring knowledge. I learned a lot, and I think it would really improve my business, entrepreneurship, now that it's no longer, public service. You need to deal with even the world, let me put it that way, because from the local you go to international. Yes, back to our topic of discussion. The fintech in the real sense, have added value to the development of the economy, basically to the SMEs, because the SMEs are fundamentally the backbone of every economy, being it an individual economy, a company economy, or even the national, right? So where the MSCs are not doing well due to possibly lack of access to funds or even higher bureaucracy to get those loans, or even non-availability of the loans, because sometimes SMEs can apply for loans to the banks, like what the prof told us. It took him over 1 year to secure a loan of 50 million, having all the collateral in place. So, but if it is a fintech financial institution, definitely it will not take that long. And all the documents requested must be endorsed by the governor of his state while he's here in Abuja. The trouble, the hassles, and what have you, to get the governor to sign, time is wasted. If it is a deal that he can cut within 5-7 days, or even 1 month, it takes him a year to secure the funding, that business is gone. He lost the deal. So you could see that, yes, in as much as they contribute immensely to improve or to develop the economy, the SMEs should continue to patronize fintech. Why? Because at the moment, we don't have any financial policy from the government, from the public sector, that is in place at the moment to guarantee financial access for the SMEs. Basically, when it comes to even the borrowing, the high rates, as of today, we're talking about 35 to 37% interest rate from the conventional commercial banks. So there is no business that can take that money, even if you have the collateral, that you go and do the business, you pay back the interest and make any profit. At the end of the day, you even lose money. Why? Because the time it will take to even secure the money. Day one, you sign that agreement, the clock will start ticking. Whether you go to utilize that fund, whether you're going to make money, the bank don't care. And at the end of the day, if you don't bring the money, they fall back on your collateral. Like what our president said, even if he has a house of 100 mil, he wants to take a loan of 50 mil, his heart will be beating, because his second thought would be that at the end of the day, this house is going to go. And you don't make any money to replace the house, you go back to ground zero level. So which means, essentially, fintech is the way to go. And fintech is the future for supporting SMEs. As much as we want to really do business, and we want to use time, because in business, time matters a lot. Cutting the deals, time matters a lot. Closing the deals, time matters a lot. So when you don't manage the time, you could lose money, because the whole thing is risk. There is no business that has no iota or element of risk. The higher the returns, the higher the risk. So your ability to manage that risk along the line of securing the funds, executing the contract, getting the payments, paying back, is all a function of time. If you calculate that time wrongly, you lose money and you burn your fingers. At the end of the day, you go to start looking for a rescue. So I strongly believe that the fintech are doing well, and SMEs should be encouraged to continue to patronize fintech for financial solutions to develop businesses and develop the economy at large. But one thing that I didn't hear from the forum is that the risk underlying risk which the fintech owners will not tell you, or any business or any entrepreneur should think about it. How does fintech come to life? What are the risks in dealing with fintech? What happens tomorrow if I have 100 mil or 200, 500, 1 billion transaction through fintech? Though could be my money, not even, but I always use the platform. If I wake up tomorrow and I hear that the server, the server of this financial service provider has crashed. So what's my fallback? Where do I go? I don't know if there is a legal practitioner in the house to help us. What do I do, or what do we do in the event such things happen? If there is no thought about it, it's high time we think about it. And which is the opposite of the conventional banks. Even if I operate online, anything happens, though it's also a bad situation from the financial regulation we have at the moment, unless it is changed, which I'm not sure. Even if you have 100 billion in the conventional banks, God forbid, tomorrow that bank goes under or goes bankrupt and liquidates, what is it called, the financial NDIC would only give you 500,000 max. Yes, so that is another bad situation. So we, the entrepreneurs, will have to always weigh where and how, when to take a good decision, so that at the end of the day we don't burn our fingers. Thank you very much.
Thank you so much, Alhaji Adamu Umar, for that critical insight, especially the issue of risk. Of course, you might recall that each entrepreneur is expected to be a master of risk. Of course, we call it calculated risk, but essentially it's also risk. Because life ordinarily is also full of risk. To be alive today is a risk. We are running a risk to either live or die. So, as the case may be, so risk is involved in every aspect of life. But it is important that it was pointed out that getting money from fintechs and these fast process money processors and so on, not the MMM. The MMM is a different world in itself. So I'm not talking about MMM. If you give me $1 today, by tomorrow I'll give you 1 million. It's not what we're talking about. So distinguished participants, thank you so much, panelists, for this wonderful insight. I want to now address the participants right now. It is now your turn to ask questions, make observations, say anything you want to say about what we're talking about, fintechs and SMEs, entrepreneurship and inclusiveness, the digital economy. Just say it. If you want to ask questions, if you want to contribute, go ahead and contribute for the next 10 minutes. Thank you so much. Sorry.
Thank you so much, distinguished panelists and the moderator, and of course our president and members, our delegates of this conference. This topic for the panel discussion is apt, and of course it's a brainstorming exercise. It's something that we need to review, and especially as it concerns fintech and SMEs. When we talk about fintech and SMEs, we are looking at the value of money. Money has to be timed, and fintech is a technology that will give you the opportunity to have that value and be able to turn it around. I remember I refer to what Dr. Bakari said, that in entrepreneurship you must plan to give us some element of value. From that value you can make your money. But I remember when I was in a finance house, I was the MD of Noble Part Finance, and that time, financial technology was not there. People, you borrow money for 90 days to finance local purchase orders and things like that. But when I was the MD, I developed what we call domiciliation. And they were able to distinguish between funding public institutions and private institutions. I funded NEPA LPO at the tune of about 16 million. They say NEPA don't pay, but because of that domiciliation exercise, because you use money to get money, that's what fintech is concerned on. What I did my environmental scanning, and I had it was the supply of transformers. Though we funded it through an agent who got the LPO, but I asked him to domicile it to our financial house. Yes, and I took the responsibility to go to Alaba International Market to identify those products, and I paid through another bank to them, and I followed those items to be delivered at the Oshodi depot. Not only that, I actually followed up to NEPA office. I went to the NEPA office. I was introduced to the Executive Director of Finance, Mr. Edom, who now connected me to see the MD then. Do you know where, it's a Nigerian game, that payment was made within 4 weeks. Though, with the arrangement of the facility we gave us for 90 days, people were surprised. But when you want to do the normal financing, you pay and relax. No. You see, that's where fintech started. You see, fintech is actually interested on value of money, and it gives you what we call expertise on what you do. We believe, like I say, if you do an environmental scanning, you'll be able to determine areas of your expertise, even if you are doing multitasking. Okay, try to identify areas of your comparative advantage, so that even if you are making 1%, 10%, it will be a sustainable and because a business is a continuum. You do business to continue. Don't just do business to stop today. And that is where fintech is working. So when you talk about risk, the risk element in fintech is that when you didn't do your business planning properly, but you can do a fintech seamlessly without risk, because it depends. Just like when Dr. Fashan was presenting his papers, he made about what we call business development service providers on other countries. In fact, South Africa has adopted it. BD experts, BD professionals are not just there to take their agency fee. They'll be part of you in that business, because if you are paid, they are sure of their business. The person you are borrowing money is equally sure of business. And then there's what we call multiplier effect in funding, because timing is of essence. But when you get fund and dump it, of course, a lot of things. If you take 1 million and keep it here, and you don't have a direction what you want to use that 1 million, tomorrow you begin to suspect your friends, your wife, your family, because money is like, you must spend it. So that is where fintech has an advantage. Of course, the risk element, we have to look at NDIC, CBN has actually come up with methodologies, how to ensure that the risk element is reduced and controlled. One, insurance. Insurance, they are coming up with products to deal with fintechs, depending on the aspects of the fund, including health, including financing. So they have periods of funding. You pay the premium, pay the what do you call it? Yes. As soon as the money is paid, they make their money. Okay, and it will advance technology, to advance activity in financial institutions. Thank you so much. I don't know whether I've made a point.
Yeah, thank you so much, our able Registrar and Chief Executive of Dr. Ekele for those critical insights to fintech operations, the risks involved, due diligence, domiciliation of proceeds, and so on and so forth. It was a quite enlightening comments, and we thank you so much for that. Do you have any more comments? Okay, please go ahead, introduce yourself, and also say what you want to say. Thank you.
Good evening, panelists and members of the council, as well as other participants. My name is Dennis Kadri. I'm the HOD Technology Business Development, Naseni Solar Energy Limited. And I'm the MC here today. Sorry. Uh, my own contribution in this discussion is this. You know, Alhaji made mention of risk issues when dealing with the fintech as an organization, as an organized sector. I wish to suggest that sometimes when you are to do business, you look at some permutations. Thank God, Doctor told us today that PPP, as we used to know it to be, is public-private partnership. Today, it's not just that, it could be private-private partnership or public-public partnership. We need to also educate our people that want to do business that sometimes if I am to borrow 50 million from a bank through these fintech arrangements, why not I sought for 25 million from them and use the leverage I have. I have served the country for like 20 years, 25 years, 30 years. 35 years I'm retired. In the course of my doing business or my service, I ran into people, I did deals with people, and I did them with open mind. I built integrity, and they saw that I have integrity. There are some people that will go and sleep, will give you 25 million naira and go and sleep. Because they have tested and tried you. You have done things with them, you never defaulted. You didn't tell lies. Even where you were to default or you defaulted, you still told the person the truth. Sometimes you can explore the private partnership arrangements. Sit down and say, I draw a list of 50 people, big men, that I have done business with. Let me start reaching out to them with my proposals. This is what exactly I want to do. Then you reach out to those ones that are in the same line of business as of the one that you are trying to establish. By the end of the day, you discover that some of them may want to even partner with you, give you some monies that will not even be, that will be even be interest-free on trust. To say, okay, I'm giving this to you, 6 months' time, return it back to me. Or, I am giving this to you 6 months' time, I want to be part of your business. Give me 10% of what you get as profit from this business. You sign that agreement. You are not paying interest outrightly. You are paying from the profit you have made to the person that is borrowing you that money. In that case, the risk is now on 25 million instead of on 50 million. So with that, to an extent, when it works, or if it works, you are good to go. But the issue is that sometimes, because someone told me some times ago, and I also know that it is so, there are some people that have some billions of naira somewhere. They don't even know what to use it to do. Some of them are looking for where to put this money. As an entrepreneur, you have started doing business. You don't start thinking only on how to do this product. Also start thinking, searching for those people that have idle money. Reach them with some proposals. You'll be surprised. The money comes 80% from a friend or a family member, then 20% from fintech, so that the risk will be small. Thank you, sir.
Thank you so much, Mr. Dennis, for that insight. In fact, the summary of it is we need to have integrity. If we are borrowing money, whether we are borrowing from commercial banks, from fintech, from friends and family, we should have integrity. If we say we are coming to see you tomorrow, other things being equal, let us come and see you tomorrow. Even if you have a challenge, don't run away, don't switch off your phone, don't do any negative thing. Explain to your lender what happened. That's the way to have integrity and value and character. And that's the way business is supposed to be run. Thank you so much, Dennis. Any more contribution from the audience? If not, we're going to round up right now. Okay, sorry. President wants to say something. Yes.
Thank you, panelists. Thank you for all the insights and all. I'm just thinking outside the box. With all this growth between entrepreneurship and all these tech companies, especially the AI now that we're talking about, is booming and all. But you know, this boom, it has a timeline almost. You know, we have the internet boom during the 90s, you know, when all these companies were pouring a lot of money, making all these internet startups companies and all, and then all of a sudden it burst. We have the housing boom, we have even the oil, you know, oil boom, and then all of a sudden, exactly, they will go way up, and then all of a sudden from nowhere, it will be coming down. So with this AI, is never even going anywhere, but it's going to be, we expect it to keep going, God knows how long. But in the absence of a burst, you know, when it bursts and all, what do we do with all these, our teeming young people? You know, are we going to send them back to the farms? I just want to hear your own views about this boom going to the sky and then coming back down. So when it comes down, what happens? You know, we are just thinking outside the box. We are thinking about the future of our kids and stuff, our grandkids. What will happen to them? You know, even though that's when it will really peak during our grandkids' time and all. But even after their own grandkids, what will happen? Because maybe they will go beyond AI that time. Who knows what will happen? Probably people will be working on the air, you know, and who knows what. But I just want to hear your thoughts about what will happen if this AI thing burst. That's all. Thank you.
We're going to go around. Don't worry, we're going to go around. Yeah, thank you so much, our dear President and Chairman of Council, for that thought-provoking question. You know, if you look at what has been happening, our young people are too much in a haste. They don't want to fold their sleeves and take the normal process of running a business, or even if you're in paid employment, they will not calm down and go through the process and be able to achieve what they want to achieve. Everybody wants to be a millionaire the next minute. Everybody wants to buy the best. So, dear panelists, as you say your concluding thoughts on what I've already said, take some time and then comment on what the President just
Okay. Let me take the first shot. My co-panelists can also contribute. Basically, like what Mr. President has observed, to every, development or innovation, there is always the downtime. It's real in life. Because even if you look at the, what is it called? We say the life graph, it starts from the base, and it goes up, gets to the peak and it starts declining. So it is in any technological innovation. So I would suggest we start from the family cycle. What I mean by that is most of us here grew, to know and learned that our forefathers, even our fathers, even though they are educated, but they had a trade. So in our generation, we also learned that trade. Personally, when I was in school, even right from primary school, I do go to the market. In secondary school, I go to supervise. In university, I go to sell. I now see, okay, I'll take these goods, go to sell them, come and give account. So it is, as of today, our kids are Gen Zs. What I mean by Gen Zs, they believe, because of their orientation and the availability of technology, the access to tech, that everything is digital. You understand? So it is in their mentality. Look, if this is the procedure, if this is the way, how do I fast track? How do I get there within shortest possible period of time? So, but it is now our own duty as parents. We have to reflect back and adopt that family business thinking or family enterprise mentality and culture. Inculcate it in their minds. Because let me give you an example. When I was in the office, I had a colleague, he's my senior colleague, he retired before me. He has been a fantastic mechanical engineer. But over the years, we met in one of the fora. I asked him, I said, what do you do for a living now? He said, Alaji, if I tell you, you laugh at me. Oh. I said, what do you mean by that? Have you set up a manufacturing outfit? From your background, he said, it will shock you that today I'm an accredited stockbroker. And that is my calling. I said, what do you mean by that? After spending 20, 25 years as an engineering professional with all the membership and what have you, up to the fellow of Nigerian Society of whatever. He said, no, I discovered I was missing the track. So I say, how do you become a stockbroker? I just picked interest. When I acquired the skills, have about 50 employees under me. So you could see the narratives have to change. And let me bring home the Japanese culture. Even if adopt it, and that business is funded by who? Not by any financial institution or from any bank, but from the family. You have to take your own equity stake in the business. Any member of the family can give you a loan. When the business makes profit, you have to pay back that loan, but you are part of it. So what am I saying in essence is that
to make sure that all his children access
we should leverage on these innovations. We are complaining of brain drain in terms of our doctors and healthcare personnel. But a doctor, a surgeon will be in China and operate here. That's what we should be looking at. And I'm happy this discussion is championed by the Institute. I want to believe that we'll take it further in the next discussion, because we cannot exhaust this topic. We cannot fully exhaust it because it is big and it is huge.
President asked what the AI is going to lead to and when this outburst. I don't know if anybody answered it. When the AI is trending now, when it now gets to a level where it bursts, what will be the case if we continue with the way we are going? Okay. So, thank God for insights. We know that by now we should already understand where to apply technology and where not to. Our people should be able to separate the two so that we don't rely too much on things to be done for us, because the next era now will be robotics. From AI now you are having application support assistants, agents and so on and so forth, which are all virtual. The next one will be hardware, which are robotics. In that regard, the children that are not having skills now, that are exploring all these advantages of virtual assistants rather than them trying to learn skills and handwork. We no longer be doing things. You now see people buying robots at home do and serve them. So the human capacity will go further down than it is now. That's just it. If we are unable to identify where to apply technology and where not to, there should be policies to separate them. Like he rightly said, we shouldn't be having paper documents too much, and we know how slow it can be. It should be authorizations and soft work. That you don't need somebody to learn a skill for, but what? Technology, because of the load of work and the nature. But for skill, if we don't go into it, it's going to lead to that chaotic ground. So robotics will take charge. A lot of people are going to be laid off work. You may not even be able to see people to fix things for you anymore. To do things that will have human interaction, and it's already happening in healthcare, where they have shifted a lot of. I'll give you an example: medical laboratory scientists now, very few. We are not talking of doctors now. We're talking of technicians. Medical laboratory technicians and scientists are now very few.